Alright everyone, we're nearing the year's end, and Wall Street has officially switched gears into what we can call performance preservation mode. A lot of folks made some nice gains in the AI sector earlier, right? Well, some are now cashing out, taking profits off the table. But where's that money going? It's flowing into new favorites like industrial and financial stocks, sectors more sensitive to interest rate shifts. This past Monday, the broader US market faced downward pressure. The two key AI-related companies that led last week's decline, Oracle and Broadcom, delivered a 1-2 punch, and they haven't stopped. On Monday, they fell another 3% and 5% respectively. This followed a brutal week where they plunged 13% and 7%, dragging down the entire tech megacap space. The tech-heavy index ended last week down 1.7% in total, while the Dow Jones actually gained 1%. It's a classic case of different sectors moving to their own beat. A lot of you have been asking me before bed, in the live stream, is tech crashing again? Let's be clear, we're not at a crash level. But, your go-to source for insights is here with the Wall Street take. According to a senior analyst at Gain Capital, confidence in the megatech companies was already shaky. With sky-high valuations and massive, non-stop investments into AI, the big question is, how long can this last? Can they continue to be the engine of this bull market? Last week's earnings from these two giants only deepened the market's doubts. People are starting to wonder if these big players are getting a bit disconnected from reality. Now, not all tech stocks had a bad day. The Iron Man of the group, Tesla, bucked the trend and soared over 3%. Its stock price is approaching last year's high around $488. Why? Musk announced they're testing driverless taxis, meaning no one in the driver's seat. While this isn't exactly new, Google's Waymo has been commercially operating for a while. Investors gave Elon plenty of goodwill and emotional support. A big part of Tesla's current valuation is precisely the high hopes pinned on its autonomous driving and humanoid robot projects. On another front, we're seeing improved economic data, which is keeping confidence in the overall US economy intact. This gives capital the perfect excuse to keep rotating into areas of the market that are playing catch-up, including cyclical small-cap stocks and other economically sensitive industries. This rotation trend is something a veteran strategist with over 40 years on Wall Street predicted to me back in mid to late October. You might want to revisit that interview for context. So, what's on the watch list this week? Tomorrow, we get the delayed November non-farm payrolls and October retail sales data. On Thursday, the October CPI report is due. Also critical are the Bank of Japan's policy meetings on Thursday and Friday. Want more real-time, frontline analysis straight from Wall Street? You know what to do, hit that subscribe button. Let's keep an eye on the markets together.